Quantum Analysis now with Stan Shamu from IG in Melbourne. Stan, great to see you. Just wanted to firstly ask you about what we saw in those moves in the currency markets and how, you know, the Aussie dollar seemed to benefit from that.
Morning, Brady. Absolutely. I think the risk currencies are well underpinned at the moment. Of course, some of the Fed members continue to come out and sound a dovish tone. I think overnight we had Charles Evans coming out and basically saying that the benefits of QE far outweigh the costs of QE, but it's not really a surprise. He's a traditional dove. At the same time, Janet Yellen wrote a letter to the Senate and basically reiterated her support for quantitative easing. At the same time, we've got Bernanke due out at 11 a.m. and he's also likely to continue to sound that same sort of tone that we've heard from him over the past few years. So I don't think anything will really change in Bernanke's opinion and approach. So chances are it's likely to be another dovish statement from Ben Bernanke. At the same time, we also had those developments out of China. Of course, those details from the third plenum continued to resonate through markets. And of course, they do look like they are much more aggressive measures than the market was positioned for. At the moment, the headline everyone's been focusing on is China or the PBOC exiting from regular market intervention on the FX front and essentially widening the trading band on the yuan. So this should also be quite supportive of risk. And of course really brings in confidence on the China front that they are willing to do business and they are a little bit more acceptable of international investment and of course a ramp up in privatization in China. So eventually these measures should lead to somewhat of a support for the risk currencies. At the moment the Aussie remains well underpinned. It's now back above 94. Of course heading into the RBA minutes yesterday we were seeing a little bit of weakness in the Aussie dollar, but whilst the RBA continues to be concerned by the strength of the Aussie, I think it's becoming clearer to the market that they can't actually do much about it. They can't actually cut rates at the moment because they do run that risk of creating asset bubbles, particularly in the property market, whilst some industries are actually showing signs of improvement, and they even said that they are seeing mounting evidence of this easy or loose monetary policy starting to help the economy in a positive way. So in light of that, I think the Aussie really had to rally off those lows. And of course today we also have Assistant Governor DeBell speaking at 11:30, of which we'll continue to assess what sort of comments we get out of the RBA and what this means for this easing cycle. But I certainly think that this wait-and-see approach will lead to a prolonged period of a hold in the rates at the moment. So the Aussie dollar should be underpinned in the short term. So ultimately, most risk currencies rallied. We had the euro up, we had the pound up, and everything's really gained ground against the US dollar and the yen. So the question now is whether or not this fall in equities will have to play some catch-up to the rise we're seeing in risk. But it seems the concern that a lot of investors have with equities at the moment is they've really been overrun, testing record highs, particularly in the US. So perhaps it's time to take some cash off the table heading into this festive period.
Yeah, okay. Also something that can impact our market, Japan, the Nikkei. We've got the first day of the Bank of Japan meeting today. What can we expect there?
Yeah, Japan, I suppose, is the most interesting part of Asia at the moment as well, because we've got a situation where everyone's thinking the BOJ will have to act at some stage because of that pending sales tax hike. I think yesterday we saw a sharp pullback in the Nikkei early on because of an appreciation of the yen, with the dollar yen dropping below 100. But we continue to see buyers on the dips in the Nikkei and of course the dollar yen, and this really has helped support Japanese equities. And of course heading into today's first day of the BOJ meeting, there will be plenty of speculation that perhaps the BOJ will announce or set the market up for some sort of further stimulus to come. I think a lot of investors are keeping a close eye as well on the fiscal front, with Finance Minister Aso coming out and saying that he's looking at further stimulus without actually, or a stimulus package without actually issuing more bonds, which effectively has a negative impact on the yen, and we'll see that dollar yen move higher continue. and ultimately support the Japanese equities. So that Japan remains certainly the most interesting market to watch. Whilst we're calling most markets in the region lower, we're actually calling the Nikkei up 0.5% today, so that should see it extend its gains above 15,000 at the open.
So what does all of that mean for our market? As you said, questions around why, risk currencies are doing well, yet equities seem to be taking a bit of a breather.
Exactly right. I think with the local market, we're calling it down 0.5% at the moment. It will probably open just below that 5,330 mark. So that should be quite interesting to see how investors in the region respond to some of the developments we're getting across the globe. We're looking at a weaker open for BHP, down about 40 cents at the open, so it seems like the iron ore miners are in for a bit of a tough session after iron ore fell for the first time in 7 sessions. Gold bounced a little bit, but I don't think this will make too much of a difference for the gold miners. They're in solid downtrends at the moment, well out of favor by the market. We'll really need to see a few positive days for gold before investors really have buying interest in the sector. We've got Emiko with his AGM today, and after that recent disappointing trading update, I suppose their comments will be interesting. There's also an AGM for Maya, of which a sales sort of report from Maya, and the trading environment will certainly make a difference for most of the retailers and other consumer sort of discretionary related sectors out there. So that's in line with the fact that the RBA sees mounting evidence of an improvement in conditions, should make this Maya AGM very interesting from a consumer confidence perspective.
Stan, thank you so much for that. Lots to watch out for. Stan Shamu there from IG. Coming up on